Is everybody excited? I know I'm excited. It's Waiter O'Clock, baby. Woo! Let's do it. Let's do it. Let's do it. Waiter O'Clock. Boom, 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 boom. Waiter, waiter, waiter. Okay, so Waiter touched three. What was the high on the day? Let's see here. Waiter went as high as 350 on the day, 360, 355 on the day. So, mucho bella. Okay, very happy with Waiter. It did come back down at the end of the day to close at 320. It then continued to fall after hours, and people are like, "Oh, what's happening?" I'll tell you what's happening. I am very happy with what I am seeing out of Waiter. I cannot wait to hear what the call has to say. But what we are going to break down real quick is the results here, and then the earnings calls at 5 o'clock. So we'll take a look at that as well. Okay, so for me, the earnings are looking good. So let's get into this right away, guys. For those of you that haven't seen an earnings report before, this is what it looks like. The earnings look really good to me, and I'll break down why. We'll go through a few of the things that are important, a few of the things that some people would be less excited about, but we'll break all of it down. Okay, so revenue for third quarter was 52.7 million compared to 49.2, increase year over year of 7%. Good, we're up. We're up year over year. Now you have to take into account, guys, third quarter for food delivery, we had lockdown. Excuse me. We had lockdowns ease up, and we also have the summer where people typically barbecue. You know, you're at home, you're cooking outside in your backyard with the nice weather, right? So technically, we also had the hurricanes go through the section where Waiter often puts in the majority of its sales, where it services southern states. So a lot of people were saying they were expecting Waiter to decline year over year. They were expecting them to take a loss on EBITDA for the quarter. They were not expecting them to grow in value. So let's see if all of that naysaying on Waiter holds up. 52.7 million compared to 49.2. That's a year over year increase of 7%. Check. We're not down. Net income for the third quarter was 4.6 million or 4 cents per share compared to a loss of 220 million last year, third quarter, or a loss of 289 per share. That is huge. Absolutely massive. Come here, kiddo. You want to sit with me? Okay, we're breaking down earnings here. So, adjusted EBITDA for the third quarter was 13 million. Now we'll get into EBITDA. This is your earnings before taxes, depreciation, and amortization. Okay. But the reality is, a lot of people don't necessarily like adjusted EBITDA just because it's not clearly outlined. So we'll get through that when we get down to the numbers. But they do use the same means of demonstrating that year over year. So third quarter, they are positive EBITDA again, as well, compared to a loss of 15.4 million third quarter last year. It's an increase of $28 million. As of October 31st, cash on hand was now $80 million. That's up from last quarter. Sagana MGL, thanks so much for the follow, man. Much appreciated. The company completed its at-the-market common equity offering program on July 10th, 2020, issuing a whole bunch of shares for net proceeds of $47.6 million. So they did an at-the-market equity offering program. It didn't cause the stock price to decline too much. So I'm okay with that. They raised some money. They've got some more cash in hand. They have 80 million bucks now sitting in their pocket. They're able to go through this and into a second wave in winter.
Pile of poo said Nicola just wants to be like me.
There's Stovey for you. On August 3rd, 2020, the company prepaid 10.5 million to its lender in exchange for a rate decrease of 200 basis points for 1 year, along with a 1-year extension of the maturity date to November 15th. So, because they made a $10.5 million payment to their line of credit, they reduced the interest rate on their owing and they extended the payment period by a year. This is good. This gives them more time to continue making positive cash flow in order to pay off these debts without there being a risk. So, CEO, who will be the one talking today, Carl, his comment on this is we achieved a second consecutive quarter of continued profitability and operating cash flow, which we believe is the result of our fundamental. Okay, off you go. Love you. Which we believe is the result of our fundamental strategic initiatives and focus on operating a profitable business. We believe the continued hard work for our team members, diversified selection of restaurant partners, and increased driver-based strengths our position in many markets. So going into winter, this is looking really good. I'm seeing buy. I'm seeing buy right now. All of the metrics that I'm watching showing that they're making more money year over year. They're reducing their debts year over year. They are profitable for the second consecutive quarter. We are looking really, really good. So average daily orders were about 40,000. Active diners were over 2 million. That's great. Liquidity update. Company has cash on hand of 77.1 million. Debt outstanding of 99.2. 49.5 that is in term loans. 49 is in convertible notes. The other is promissory notes. Now, by extending this to 2023, the payment of these notes, they actually allow themselves more time to pay these off, which looks fantastic because they are slowly making the payments to this, right? So if you sold at 340, you sold at 340. I held. I think the news that I see here is going to cause this to go. I'm also thinking that we might see something about a buyout on today's earnings call. I'm not. It's not announced yet, but I think that there might be something in there. Okay, so let's get down here. So revenue year over year up, costs and expenses. This is a big one, guys. Wouldn't they announce it in the earnings report? Not necessarily. You could file your 10Q for earnings and file an 8K at the same time. Yeah, waiter just turned positive again. What'd I tell you guys? Look at this. Look, did I shiver? Did I quake? Not for a moment. So these are in the thousands. So 52 million instead of 49 million is their revenue. So we're up again year over year. That's good. Total costs and expenses. Their costs and expenses this quarter last year, $265 million. This quarter, $45 million. This is huge. $120 million not there in costs and expenses. That's goodwill impairment from their acquisition of Bite Squad. That's other assets and impairments as far as bringing on new staff. All of that's there. All of that's gone. Net income or loss before income taxes. Last quarter, last Q3 2019, they lost 220 million. Net income before income taxes, they're positive $4.6 million. Net income loss, income loss per share. Last year, Q3, Waiter, EPS, negative 2.89. This year, 4 cents. That's green, baby. That's green. Total current assets, 223 million. Current liabilities, 30 million. Okay, so is anybody seeing why I'm excited here? When the assets are gradually increasing over time and the liabilities are gradually decreasing over time, and we are headed into a peak period for food delivery, being the colder season, so September, October, November, December, as well as a second wave. Mwah! Loves it. Loves it. Cash flow from operating activities last Q3 negative $50 million. This 29 million. Cash flows from investing activities, so negative 195 million, 3 million negative this time. So it's still negative, but we're seeing a drastic improvement. This is a good story. Adjusted EBITDA 13 million in the positive, as opposed to last year negative 15 million. This is fantastic. We are seeing consistent results to the positive. They do, and this is addressed in here somewhere. Where do they talk about it? Waiter has also diversified its product offering beyond food delivery, having recently introduced its tableside service technology. Combining this dine-in offering with its existing delivery and takeout ordering services, Waiter now offers an integrated payment solution that can help restaurants improve their safety protocols, sales, and efficiency both inside and outside the four walls of the restaurant. Now, additionally, the company has continued to its expansion into new delivery verticals such as same-day groceries, alcohol delivery services, while offering no contact delivery. Of course, it's bouncing back. This is fantastic. This is fantastic. Yeah, this is the third time I've played Waiter now. I'll pull up the chart here and show you when I played Waiter. So one of the reasons, guys, why in chat we have the Waiter emote. Um, the emote that we have there, guys, is directly because of the Waiter earnings being so fantastic and being a big moneymaker for us. But we did get in March on Waiter as a potential play. So back down when it was around the $1 mark, we got in. And it took off for us to about $1.97. It came back down. We bought in again. Went up again. Probably got out here closer to the $3 mark. Came down again. We bought in again. Rode it up to 5.30. I didn't get out at 5.30. I got it at around 4.80, 4.75. And then obviously it's come back down. I bought in. Currently, I have about 10 grand US in this thing in equity. And it's a 284 average I have on it. So 284 average on Waiter at the moment. Earnings call is in 20 minutes, less than 20 minutes. We're just breaking down the early results. The early results are looking muy bueno. I'm so happy. So happy. So we're going to go over here to Waiter, and I'm going to go. All right, all right, all right. 8 to 10. 8 to 10 if it gets bought out. Yeah, so the did this not post? Okay, it did post. Okay, people are saying that their webcast is now live.
The audio webcast you are currently trying to access is unavailable. Please check back.
It is not live. Somebody lied to me here. I'm gonna mute that because that's annoying as shit. But yeah. So guys, we are heading into second wave. Q3 is going to be the slowest rolling quarter for food delivery services. Pair that with hurricane season. People expected Waiter to take a loss in this quarter. When people are barbecuing as well as hurricane, people are doing less food delivery was the theory. Waiter still came out profitable. Now we are headed into the colder seasons and the second wave of COVID. You better believe Waiter's looking gangbusters here. They made profit, they paid off debts, they're moving forward. I think we're going to hear some great guidance out of the earnings call here in a second. I would not be surprised to see this run to $6 at least. If they talk about a buyout, closer to 8 to 10. All they had to do was show profitability. What do I mean by buyout? I mean like Uber Eats showing up and saying we're gonna own you now. Yep. No, Waiter will not do that. You will not get they can't offer guidance. You will get them very much offering guidance. DraftKings, I think DraftKings is largely going to depend on the sporting industry. And if Biden does continue to move towards a lockdown concept, expect sports to take a hit and DraftKings to decline, would be my opinion. Now, that being said, guys, before we go into this earnings, I do need to throw up a disclaimer. Everything that's on here is for education purposes only. I am at no point giving financial advice. I am not a financial advisor. I am a degen just like you. I do my, you do you. Make your own educated decisions. I'm not responsible for your ass. You're responsible for yourself. All I'm here to do is to educate you guys into what the resources are, how I interpret those resources. You make your own plays, not me. That's on you. Clear? Clear. Awesome. With that being said, I think that we are getting pretty close here to Waiter o'clock. Okay, this is saying Waiter at 309. This is saying Waiter 315, 320. 340 is not bad profit. There is no reason for you to be upset about that. Win is a win is a win is a win. So do not be upset about taking profit on that. If you took a win on it, fantastic. I just know with a 284 average, so I'm down here, right? Down here, 284 average. Ooh. Wait, Saga's got the beaver. Saga, you're a sub? How did you can beaver without the sub? What? Interesting. Interesting. I wonder why that is. Hmm. Can unlock using channel points. Okay. The beaver's a nice one to have, man. I'm happy about that beaver. More beavers I see across Twitch, the happier man I become, I tell you. Guys, also huge shout out to y'all for an amazing month. Currently our a sec here. We were at 6 or 7 at the start of the month. And we are now up to 59 subs on this thing. 59 subs. This thing is growing nicely in the month. Huge shout out to all of you guys that have started subbing to the channel, but as well, the followers has just taken off like crazy, absolute crazy. So huge shout out to all you guys that are following, all you guys that are subbing. The last 30 days, we're up 260 followers, 58 subscriptions. Like, that's what I love to see, guys. People showing up, learning how to do this stuff, making plays, making attendees. Like, I love it. Absolutely love it. Bump, 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 bump. Look at Beyond. It's all good, American Analyst. I'm loving the waiter earnings report so far. Beyond after hours. Beyond just had a deal with McDonald's come out today. 109. Oh, yes. Oh, that's a buy the dip. Oh, that's a buy the dip. I just hope it keeps that weight off. I hope it keeps that weight off. Ooh, that's a buy the dip. That is really exciting for me. Not yet. There will be tomorrow if waiter does what it's supposed to do here. We'll wait and see what the earnings call has to say. But I mean, buyout isn't assured by any means, but this is big, guys. Conversion of convertible notes to stock. So instead of them getting paid back on their notes, they took stock option and said they see the value in it. For all you that joined from over on StockTwits, welcome, welcome, welcome. But yeah, we are going to keep the ball rolling here into the waiter earnings. They're playing elevator music right now. How does that sound? Not great, right? Okay. We're going to mute them again. We'll come back to it. But yeah, absolutely massive. I couldn't be happier about that. I know this is saying waiter misses on revenue, waiter misses on EPS. This doesn't matter. Profitable again. That should be the headline. Beyond Meat. It all depends. I never give my exact exit. My target on this on earnings is $6. My targets on a buyout would be 8 to 10. I've got equity and options on this. My equity average is 284. My options, I've got waiter 3s for November 20th. I got them for 35. Beyond does have huge potential, absolutely. Swine flu is still a huge thing that's ravaging the world. Meat is an all-time shortage. China is going to need pork, and we can't provide it. Biden's limp wrist when it comes to trade deals. So, I've got waiter 3s for November 20th. So I'm in strike. But if this goes to 6 to 8, I'm going to be doing much better on that. Right now, I'm profitable on them at least. We'll see what happens as we run here. Rita will still tell you it's dog shit. It's still definitely classified dog shit. Anything sub $10 is dog shit for sure. But that's kind of where I live. That's the ballpark I play in. So it will still qualify as dog shit, but even in dog shit, you can find a piece of gold every now and again, right? So that's kind of where I am with Waiter. I think very soon it could just be acquired. If not, it will build itself into not being dog shit. The company that is profitable quarter after quarter after quarter, and it's got this really beautiful pattern of we go into earnings, and then after earnings it takes off on its results, and then it slowly comes back down because it's not getting headlines like Uber Eats or Grubhub or any of those guys. And then we head back in earnings, people get excited again, and it has its earnings, and then it takes off again, right? And then it comes back down. You've just been able to play it so many times, and it's repeatable. Yeah, and that's on Seeking Alpha too. That's on Seeking Alpha. That's not the story, unfortunately. That it missed on consensus for revenue and EPS doesn't matter to me. What matters to me is, were they profitable? Yes. Did they pay down debt? Yes. Are they showing growth? Yes. And are we going into the cold seasons and a second wave of coronavirus? Yes. I think this is huge. Also, when they start talking about stimulus, they are going to be talking about restaurants for sure. And that's a big part of it as well, is you need these small retailers, these small restaurants, to get some kind of a stimulus to help them survive through this. So it'll be very, very, very interesting here. We should be getting close. I can go into TD and get after hours on it. It's 310 right now. Let's go guess here. The bid ask 306, 310. It's down 10 cents from the close. AMC's down. That's fantastic. ACB is up. Wells Fargo is down a little bit. CBay is the big play for next week. That's the one I'm watching real close. Real close. BCLI announcement in a few weeks. Let me pull it up on the Biopharm Catalyst calendar and see if there's anything there. If you guys trade biopharma and you're not using this tool, this is a free tool that I highly recommend you take a look at. BCLI, you say. Okay, phase 3 top line data due by the end of November for ALS. They must have done a share offering that's fallen. When did this fall here? October 15th. Their third quarter results tanked it. They took it down from the 18 that it was at. They do have somebody signed on to manufacture. Yeah, this is a potential play. This is a potential play for sure. Yeah, definitely a potential play there. You gonna join the call? Yeah, we're just waiting on it. That elevator music that you heard, this is the call right now. Don't nobody want to sit around listening to elevator music, you know what I mean? Know what I mean? I'm gonna turn that off so nobody has to listen to it. Yeah, I think we've all had our fair share. I will pop in every minute or two just to hear them start talking. But Entercom, ETM got big news, guys. They are now in the sports analytics data space on top of their sports radio. I think that announcement is going to be big for them tomorrow pre-market. That is exciting news, man. I will definitely take a look at it. I'll make a note for tomorrow to do a deeper dive into BCLI. For those of you that are new here, I do a breakdown every morning live. I'm usually on around 9:10, and then I stick around till about 11. What is the plan for full-time trading? Are you fed up with marketing? I've been doing marketing for over a decade. It's getting repetitive, and the culture is one that isn't exactly aligned with who I am necessarily. There are a lot of great people inside marketing, but the overall tone of marketing for me has shifted to a point where it's just about fluff. There's so much fluff. And for those of you that hang out with me day in, day out, you know that I'm not a guy that's about the fluff. I want people to be blunt, honest, get to the point, and make it happen. So fluff just disgusts me, and I don't want to be.
Finally, please note that on today's call, management will refer to a non-GAAP financial measure. Please refer to Waiter's third quarter 2020 earnings release for a full reconciliation of non-GAAP financial measure to the most comparable GAAP financial measure. I would now like to turn the call over to Waiter's CEO, Carl Grimstead, who will give an overview of the company's business activities and development for the third quarter of 2020. He will then turn the call over to Leo Bogdanov, who will provide an overview of the company's operating and financial results. We will then open the call for Q&A. Carl, please go ahead.
Thank you. Hello, everyone, and thank you for joining our call today. We are pleased with our results we generated this quarter, marking a second consecutive quarter of continued profitability and positive operating cash flow. Our profitable results continue to prove the sustainability of our business model and unit economics, even during these difficult times. The restaurant and hospitality sector faces an uphill battle as a result of the duration of the COVID-19 pandemic. Despite impacts from recent hurricanes to our key markets and ongoing pandemic, our results continue to reflect the implementation of many fundamental strategic initiatives around service and profitability. We've expanded our service offerings and increased efficiencies, all while maintaining a cost structure with an eye on a return on deployed capital. Our focus is on continuing to grow and to operate a sustainable business model and bring value to shareholders over the long term. Our recent launch of tableside service technology is a prime example of our efforts to diversify our product offering beyond restaurant delivery, strengthening our market presence. By combining this tableside service technology with our delivery and takeout ordering services, Waiter now offers restaurants an integrated payment solution that can help them improve their safety protocols, sales, and efficiency, both inside and outside the four walls of the restaurant.
So that's cool.
As of today, we already have many restaurants who have signed agreements to utilize the tableside service technology. Additionally, we have continued our expansion into new delivery verticals, such as same-day groceries and alcohol, all while offering no-contact delivery. During the third quarter of 2020, we also announced the appointments of 3 key leaders: Mark D'Ambrosia, our Chief Sales Officer, David Cronin, our Chief Engagement Officer, and Thomas Pritchard, our General Counsel. Mark, David, and Thomas have made immediate impacts in their respective areas of expertise, and I look forward to growing the business with these leaders. Now I'll turn it over to Leo, our Chief Financial Officer, for a recap of third quarter results.
Thank you, Carl. I'd like to now turn our focus on the third quarter of 2020 financial results. Revenue for the third quarter of 2020 was $52.7 million, compared to $49.2 million in the third quarter of 2019. Net income for the third quarter was $4.6 million, or 4 cents per diluted share, compared to a loss of $220.1 million, or $2.89 per share in the third quarter of last year.
That's huge.
Third quarter 2019 net loss included $192.1 million of non-cash goodwill and intangible asset impairment charges, both considered as adjustments within our adjusted EBITDA. Adjusted EBITDA for the third quarter was $13 million, compared to a net loss of $15.4 million in the third quarter of 2019, an increase of $28.4 million, reflecting the implementation of initiatives around service and profitability. Average daily orders were approximately 39,880 for the quarter. Active diners were approximately 2 million as of September 30, 2020. As of September 30, 2020, we had cash on hand of $77.1 million, an increase of $10.4 million from June 30, 2020, driven primarily from the completion of our at-the-market offerings in July and positive operating cash flows, partially offset by a prepayment of long-term debt made to our lender. Total outstanding long-term debt was approximately $99 million, consisting primarily of $49.5 million of term loans and $49.5 million of convertible notes.
Thank you, Leo. With that, we will go into a short question and answer session.
Thank you. If you would like to ask a question, please signal by pressing star 1 on your telephone keypad. If you are using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Again, press star 1 to ask a question, and we'll take our first question from Jeff Van Sinderen with B. Riley. Please go ahead.
Hello, everyone. Maybe you could start with any quantification that you have around the impact of the hurricanes on your P&L for Q3, if you have that.
Well, Jeff, as you know and we've discussed, definitely has had an impact on order volume during the quarter. It, at last count, I think it's been 6 storms, 4 named storms, and most markets are back and up and running at this point. One of our larger markets, Lake Charles, is still struggling to get 100% back on its feet. We're really not providing any specifics around the October impact just yet. One caveat I would tell you is it's also hard to distinguish the COVID-19 economics that also played a part in any order denigration during those periods of time. But kind of an unforeseen event that we could do nothing about. The business continues to bounce back in a very strong manner, though. So, hopefully we're at the tail end of this storm season.
Okay, and then as a follow-up to that, if you look at the regions that were not impacted by the hurricanes, can you maybe speak more about what you experienced in transaction count there versus some of the, we know your overall transaction count, I guess just trying to get a sense of maybe the difference there, if that was, I would imagine it was much stronger. And then maybe if you could touch on kind of the new restaurant additions and the restaurants you've added and have similar trends as far as adding restaurants continued into Q4.
Right. So first, consistent with how I've been explaining the business from observations of what's been going on. We have this macro overhang of a lot of people out of work. And we experienced order denigration when the pandemic first hit. And then we saw subsidies come in and a massive upswing, obviously, in the second quarter. And I think how I have explained it over time is the water level went up to a certain level, and then it leveled off at this higher base. Our markets, which, as you know, are second and third tier markets, some of which opened up earlier than the bigger cities, a lot of which have unemployment issues and what have you, have leveled off. And, as we've talked about the COVID-19 impact on our business and how I often think it's been a double-edged sword for us, because in one respect, it's been great in that you have a validation, if you will, of third-party delivery. You have the diner universe has gotten bigger. But as it relates to Waiter in a somewhat of a turnaround story, if you're a naysayer, you say, well, this is an anomaly that cannot be replicated over time. And what I think the results in the third quarter show us that not only having the headwind of the macroeconomic conditions, but then also the nature's headwind, no pun intended, of these storms, the business continued to perform at a very strong unit economic base level. So what you can infer from that is I almost feel like there's potential upside when subsidies and we come out of this, because we haven't completely benefited from the dynamic that has gone on in a lot of the larger cities that have remained under a lot more restrictions than our markets have. And then to touch on your sales.
That's a big note, guys.
Right.
The southern states have not had nearly the lockdown restrictions as New York or LA.
Still early to call, but I'm starting to feel pretty proud of Mark D'Ambrosia and his team. The new sales compensation package and reshuffling of our sales strategy is really in its infancy, but we are seeing a big increase in restaurants activating on our platform. And, numerically, it may not seem a lot to you, but the restaurants that we're activating now actually create revenue. And in the past, we had a sales strategy that was more focused around stick count than it was revenue. Really a couple months into the new fully implemented strategy, I'm very proud of the direction that we're going.
That's huge. They're focusing on restaurants that create positive revenue for them.
Congratulations on growing your business,
which is exactly what Uber Eats and Grubhub do. Is they jerk off to order numbers while they remain not profitable. We'll look at that in a second.
So, best of luck going forward.
Thank you. Thank you.
And we'll take our next question from Alex Furman with Craig-Hallum Capital Group. Please go ahead.
What's this guy here?
Great. Thanks very much for taking my question. I wanted to ask about some of the components of your revenue and the economics of your orders. It looks like, not unlike the first two quarters of this year, the number of orders was down, and yet revenue was up nicely. Has that been driven more by take rate or basket size? Would be curious, what you've been seeing there in the third quarter and heading into the fourth.
Well, I think the unit economics Q2 to Q3 are pretty similar. I think if you compare the first quarter to Q2 and Q3, it's slightly different because, as we've talked about in the past, The service offering in general was behind the competition in a number of our markets. And Alex, we've discussed this in the past. I mean, the industry prices
beating
in a very similar fashion, right? The restaurant pays a certain take rate. It could be a teaser rate that a lot of people use of 10% all the way up to 30%. Drivers get paid a delivery charge. They keep their tips. The customer pays a service charge and a delivery charge. There's no special sauce here. I think if you look across the industry, the pricing, however it's bundled, whether it's initially in a kind of a teaser rate, it all moderates to be about the same level. I think that on the basket size, I don't have the actual change from Q2 to Q3. We might have saw a slight decrease in basket size Q3 from Q2, and that might be a little bit more of a shift to people being more fiscally responsible with subsidies running out. That would be a hypothesis.
Yeah,
but I think
not sure who's
general,
exiting, but
we have one of the highest basket sizes in the industry because we focus on independent restaurants that typically have a slightly higher price point than QSR.
Okay, thanks, Carl. That's helpful. And then if I could just ask about your sales and marketing efforts, and it looks like sales and marketing dollars are on track to be less than a quarter of what they were last year, and yet you've been able to generate revenue growth on that. As we, hopefully move towards the other side of COVID over the next year or so, do you think you're going to have to reinvest a little bit in sales and marketing in order to continue to drive these stronger revenue levels?
Well, what I would tell you is if you look at our margins, obviously we've documented that we can run a profitable business. We have a lot of room there to spend money, right? But as we've also talked about, we can't play the game of spending tens, if not hundreds of millions of dollars on television ads and what have you. So we're very focused on being as efficient with our capital as we possibly can. But don't misinterpret that to mean that we're not wanting to spend monies on different marketing strategies or promotions or what have you. We have the company's in probably its strongest position that it's ever been from a cash perspective. We have a lot of margin to play with, and we're going to do it very responsibly.
That's terrific. Thanks very much, Carl.
And we'll take our next question from Dan Kurnos with the Benchmark Company. Please go ahead.
Yeah, thanks. Carl, just a couple questions. First, maybe we can just go back, to just the general economic landscape and comments around, mobility and how that impacts, and then obviously, the outcome of the election, if there is a further stimulus at this point, relative to vaccines, sort of your thoughts on how that, that's probably a sort of a bit broad brush, how you think about that. And also as it relates to drivers as well, there's obviously been kind of a huge source of drivers. Does that start to, as people go back to rideshare and other things, does that start to change sort of the complexion of the landscape if that starts taking place?
Yeah, so a couple of things there. I think there's a general consensus that people need some help, and now that the election is past us, whether that comes in the form of a big subsidy package before the end of the year, or we have to wait for the new administration to get in, it's anyone's guess. I think that's upside in our model for sure. Like I said earlier, and I guess was reflected in the market today, a lot of equities that were quote unquote stay at home businesses got knocked around a little bit today. And I think that we're not at an inflated rate. From what I see in the business, this is kind of the base business where we are today. We got several things within our business that I think are unique and very positive, but in the short term, it creates a little bit of a headwind, right? These smaller markets, second and third tier, you have a lot of working class folks. They've been economically challenged by this pandemic. And you can't say that these markets have been closed like some of the major cities. A lot of our southern states have been generally open. So I think as the economy rebounds and we get subsidies, and then the last part, as a lot of our independent restaurant partners get back online and get back on their feet, I think there's quite a bit of promising tailwind to our particular business versus, the three big national guys. Refresh me. That was one part. You were asking about
drivers and the impact of drivers.
Yeah. Well, look, I think the Prop 22 outcome was more important than any outcome in the presidential election for Waiter, right? I think that's, even though we're not in California, I think that sets the tone nationwide. I think it's a big win for workers that love to work as independent contractors. We have driver levels right now that are, I think last time I looked, we have close to 27,000 drivers. We have, and I don't think that's going away, right? We've talked about it. We have people that just love what they do, and as crazy it might sound to you, we have people making quite a bit of money working in our network, delivering our services.
Yeah, we saw Beyond.
So I don't think that's going away.
And then, okay, no, that's really helpful. And then just one quick one, if I could squeeze it in, just as like with getting into some ancillary categories, if market expansion is probably not as much on the table. Penetration has always been an area of opportunity for you, and we'll see what your new sales, activation, the new sales plan yields. But how do we think about sort of unit economics, between the two as you get more into grocery or some of the other ancillary opportunities you have? Is there any material investment required there? I know it'll be profitable, but will that change margin mix?
No, I've candidly said long-term EBITDA margins that I think that our business can maintain are at least 20%. I think the unit economics in some of these other verticals are actually stronger than the pure food delivery margins. So, I think there's great opportunity there. And the one thing I'll say, this dine-in product, why it's important for us is it allows us to further pivot the business beyond just delivery. Right? This may or may not mean something to you, but this is really an integrated payments business. And this now allows us to expand beyond the delivery markets that we currently operate in to any market across the United States. We could utilize our sales network to sell the dine-in product in any city that there are restaurants. It's a viable product. And it also allows us in these different markets, if you were to get some level of critical mass with restaurant customers, because we now have an independent driver network and we have the technology platform, overnight you can be in a market with some level of critical mass without, in the past, having to deploy a bunch of capital, try to develop a market, be well in advance of ever seeing any revenue from it. So, the dine-in product helps us to leverage our sales organization. It helps to leverage, obviously, other revenue opportunities. And it also allows us to expand the business beyond our current footprint.
Really interesting. Thanks for all the color, Carl. Appreciate it.
Yeah, I'm about 10 grand deep in Waiter.
And we'll take our next question from Kunal Madhukar with Douchebang. Please go ahead.
She said douchebag.
Hi, thanks for taking my questions.
She said douchebag.
And congratulations on doing this call. It's been a long time that we've spoken at a public call. So have a number of questions. One is with regard to the competitive intensity. What are you seeing in terms of competitive intensity in your markets?
Well, as you know, all of our markets have competition. Top 4 competitors in all of our markets have been DoorDash, Uber, Grub, and Postmates. Postmates probably the least of which. They continue to have a presence in our markets. We think we have a local advantage and brand loyalty in our core markets, but they're in our markets. They're here to stay. I think if you watch national television, you see that they do quite a bit of advertising. So we're local. We're on the ground, and we have to compete in different ways than these folks compete. That being said, they're not going to go away, and nor are we. I also think that it further points to further consolidation in the space. But in the meantime, we have to continue to grow a profitable business.
The best answer to that question would have been, Uber's in every market, but they're overextending themselves and shooting themselves in the foot because they're not profitable in their expansion. We are.
1 quarter, maybe 2 quarters, especially the past 1 quarter. In the third quarter, what did you see the market shares trending?
It's generally level. We have a couple of markets that I think DoorDash has picked some market share up on us, really driven by a heavy QSR focus. But we continue to have a strong position in our top 20 markets.
Okay, that's great. That is great. And then, one on the multi-vertical delivery, how has that kind of benefited, volumes? Is that reported in GFS? Is that meaningful at all?
So I didn't hear you. I would assume you asked about grocery?
Asking about grocery, yes.
Yeah. So we're committed to grocery. It's not material just yet, but I think you'll continue not only with grocery, with alcohol, and potentially some other verticals that we're going to continue to build out.
Okay, got it. One of the things that you mentioned was that you had 275,000 drivers at the last count.
27,000 drivers.
If I divide that by the total, not 275,000. We have 27,000.
Oh, 27,000. Okay, sorry.
Yeah.
27,000.
God, listen up there, Kunal.
27,000, and I divide that by the total number of orders. That basically means about 1.5 orders per driver per day.
That's right. Remember, they're independent contractors. So not every one of those drivers is even working every day. I'm just telling you the amount of drivers that we have.
So this guy's trying to help him out, and he's shooting himself in the foot.
Number.
He should be saying, yes, that's right.
Us a lot of flexibility, and those drivers a lot of flexibility.
Of course. And one last one on the M&A front, and you pointed to further consolidation in the space. You've definitely, you've tried in the past, and it did not quite work out the way you would have thought. But now with Grub and Takeaway and and DoorDash, with Uber kind of going with Postmates, how do you see consolidation in the space? Is there an increased urgency? where do you see, the fit?
This is him
Well,
asking about
what I would
buyout.
say, to be clear, I hadn't tried in the past. That was past regime. I think,
of course, yeah,
that the business last year was in a different place than it is today, as well as the industry was in a different place. I think that you're right. We have three main players in the U.S. One that probably will be a public participant in the not too distant future. The other two are completing two transactions. Candidly, we're a perfect fit for any of them. I also think as we continue to expand our integrated payment solution, the universe of companies that we would fit very nicely with expands radically.
So they're not opposed to being bought out.
I have two more, if you don't mind. One is with regard to the ATM program that you had. You were basically selling shares at $2 a share. Is there any plan to kind of have a similar kind of an ATM program in the near term?
Well, that was completed some time ago, I don't want to make any comments on the future, but right now we're in a pretty strong cash position, and as we sit here today, it's not something that we're contemplating.
Yes, no additional at the money offering. That's fantastic.
And Carl, one last one. As we look to 4Q, you have feet on the ground. You understand the space very well. How do you think we should think about but you haven't given a guidance. So how should one think about 4Q projections as we bring in all the puts and takes from the hurricane impact versus continuing COVID versus potential maybe lockdowns, but the prospect of a vaccine. How should we kind of think about 4Q within the context of Waiter?
Well, you're right. I don't want to make any forward-looking statements here, but what I would tell you, very consistent with what I've been saying for months now, is the business is very stable. Even in the face of things like hurricanes and what have you, the unit economics are not going to change. That being said, we've had, and you saw the results of it in the third quarter, we had the headwind of people out of work. We've had the headwind of independent restaurants being under pressure. We've had the balancing act of a lot of our markets not being closed, actually being open. So I think with the advent of subsidies and/or a recovering economy, bodes well from the baseline that we're at today. And I think hurricane season is over, so that's a good thing too. So from those comments, I think you can, read into how I feel.
That makes him bullish.
Thank you so much. Thanks, Kurt. And thanks for doing the call.
You're welcome. Thank you.
And that concludes today's question and answer session. Carl, at this time, I will turn the conference back to you for any additional or closing remarks.
Well, all I can say is thank you very much for everyone's patience with the Waiter story. We've been hard at work for most of the year now. I think that the team is doing a great job. We've had a number of curveballs thrown at us, and the team has responded very well. And we hope to continue to do a good job for all of our supporters and shareholders. And we'll talk again after the next quarter. Thanks very much.
Okay, so that guy should never do a conference call again, ever. He should have somebody else do it, the CMO, anybody else but him. He should never do a conference call again, ever. Now, that being said, Westport dropped early. Westport dropped early. Ooh, they beat. That's good. It's good. I'm happy about that. Now with this, guys, the things that I heard that were of interest to me is they are looking to expand profitably using their dine-in experience. As restaurants receive stimulus, they're going to increase in their sales and revenue. As we go back into lockdown with wave 2, there's a high opportunity for an increase in sales. Q4, traditionally strong, we're looking at an increase in sales. They're not looking to do an at the money and offering, which is phenomenal. They're not going to flood or dilute the stocks at all. That's what I like to hear. And they are open to buyout options from any company that's there. So right now, guys, when we're looking at the players in the sector, I pulled them all up for you here. So Uber, Waiter, Grubhub, DoorDash, Just Eat, Takeaway, and Postmates. Postmates is private. You can't trade it. DoorDash is private. You can't trade it. Grubhub is going private and not offering forward guidance because they're being bought by Just Eat Takeaway, right? So what you've got here is Just Eat Takeaway. That's a pink sheet. That is a European one that you can't trade on the open markets here. It's only available pink sheet. 2 private stocks, Uber and Waiter. That's it. That's how, these are the plays to play this. Blue Apron is not food delivery. Blue Apron is order in a box, right? So you're not you're not going to call it Blue Apron and get your Chick-fil-A, right? Blue Apron, you order up your meals for the week via groceries, and that's it. A direct-to-consumer wine delivery, but that's it. So with Waiter, they do alcohol, groceries, restaurants. The only thing that would be similar there would be the direct-to-one consumer delivery, but otherwise this is a different thing. So Blue Apron's not on here. But Waiter, Uber now are the only 2 that you can really trade in this sector. So let's get rid of these guys because you can't trade them, right? Uber. Now, Uber's a bigger company, right? So people are going to say, well, you can't look at Uber as a whole. You got to look at specifically their delivery, right? Uber delivery, Uber Eats. Okay, so let's just look at Uber Eats. Uber Eats, delivery adjusted EBITDA loss of $183 million. Uber is bleeding $183 million last quarter in this industry. In this segment of their business, they burned $183 million of debt. Okay? Waiter, positive growth, $13 million. It's a win. It's a win. It's an absolute win in my book. Revenue's up year over year. They're profitable. They're paying down debt. No at the money offering. They're open to buyout. Everything I would have hoped to have heard. I'm a huge fan. Waiter is already back up to 276, 280 from the 240. I would expect that this after hours movement, one way or the other on it, don't get too hype on it. I would look to tomorrow. Yeah, it is not down that much. It is not down that much. And I honestly think, guys, that as we go into tomorrow, you're going to see this run. Okay, so let's look at their past earnings. If we go back to Waiter, it's a swing. It's a swing with Waiter. If we look at past earnings, so where was their last earnings? August 6th. August 8. 6. It's probably better to just use the chart. Yeah, people read the headlines. The Weeblers and the Robin Hooders read the headlines and they're like, we're out of here. But yeah, let's go up to the big sheet here. We'll do Waiter. So August 6th was their last earnings. So they did their earnings and then it came down. And then the following week it came back up and then kind of declined. So We'll see. We'll see. This did not have nearly the buy-up that this had, but this was also around stimulus talks. So as we're heading into November, and we're talking stimulus, we're talking what we're looking at for stimulus packages, all it would take is somebody to breathe stimulus at the restaurant sector, and it'll just go. It'll just go. It'll just run. So am I still bullish on Waiter with what I heard this evening? Absolutely. Without a doubt, I'm still bullish on Waiter, guys. I heard nothing. Oh, that's true. Oh, shoot, that is true. They offered a... Hold on. They offered like a sneak peek. What I'd love it is to see it get somebody else on this ticker. But for me, guys, again, on these numbers, Waiter's now back up over 280. I'm now back at my entry, right? I'm back at my entry point now. 284 is my entry, and we're right there. I honestly think, guys, that this was an exaggeration into the close off the headline. People just heard everything that I heard. They are revenue positive. They are profitable. They're EBITDA positive. They're paying down debt. They've extended their debt ownership. Convertible notes were converted into equity instead of being paid out. We also have them open to a buyout, headed into stimulus and Q4 growth. No more hurricanes. Second wave COVID where people are ordering food again. Every case I could make for Waiter that I would want there, short of just a little bit more revenue, a little bit more EPS. But otherwise, guys, phenomenal. WPRT conference call is tomorrow at 10:30 Eastern. I will probably be listening to that. Yeah, I will probably be listening to that. Now, looking at WPRT after hours, they're around 204, 209. So far, they're looking really good. Pretty happy with that. ETM on their news, they're kind of staying at that 178, but that's okay. Up 15% on the day. All in all, guys, finished up. Portfolio's up 2.6%. Really, guys, I'm just happy with everything I saw with Waiter. Not disappointed whatsoever. If this was the first earnings call you've done with me, I do these on the holdings that I've got regularly. So if that's something that interests you, you just want to hang out with the king here, great. I'm back every morning, 9 a.m. Eastern Standard Time. So you'll be able to watch me then. Make sure you're following to get that. Right now, guys, I have a family, 8 kids. I got a beautiful wife. They've made me a dinner. I'm going to head out of here, but I'm not going to leave you alone. I'm not going to leave you hanging in the lurch. Martini Rita is breaking down the Nicola earnings right now. She is phenomenal. Yeah, 8 kids. That's right. 8 wonderful kids. I'm going to send you guys over to hang out with Martini Rita. She rocks it. Love this lady. She knows what she's talking about. Smart lady. Listen to what she has to say. She'll teach you a thing or two. I know she's taught me a thing or two. Enjoy the time, and I'll see you tomorrow at 9 a.m.